something pretty big. As we stated at the start of the show, quite a lot that investors have had to toast through. The earnings, interest rate calls, election results, tariff deals, a lot. But Keiran Witthuhn, a portfolio manager at Robert Cowen Investments, joins us to tell us how he has been looking at the week, and we're seeing a softness across most indices today, from the US to here in SA, against a backdrop of records that we have seen in this week. So just help us understand your assessment of what these indices are saying right now.
Yeah, good to be here again, Fifi. Yeah, in the US and in South Africa, we've seen records this week. Yeah. The US has been on a 4-week winning streak. Every day so far has ended in the green in the US. So maybe some slight profit taking after a positive run. I don't think much has changed. Of course, there's the turbulent news flow, but I think the market largely shrugging it off at this point. A lot of it with Fed Chair Powell, with the tariffs. And then locally as well, obviously we saw the all-share index go above 100,000 this week, and another record high. But I think, conditions are favorable in the US, I think, to keep going. The bar's certainly a bit higher now, especially going into earnings season. But there is still good growth backing up a lot of this rally that we've seen in the US, especially the results that we've seen so far. Yeah,
and we'll touch on the results in a short while, but I'm glad that you did mention Powell, because, of course, most of us woke up to that comic relief in terms of Trump's historic visit over to the Federal Reserve in the wake of the renovations that were happening. It was just that awkward moment with both of them in hard hats on camera, just debating around the cost of those renovations, and that, of course, I mean, if you are a governor that looks at the numbers, you know exactly how much you're spending and how much you've overrun. But putting that aside,
I had to check that was actually real, because the first thing I saw was on my news feed.
Absolutely,
I had to check it was real. It's quite unbelievable.
Absolutely unbelievable. But obviously there was a whole lot of reading in between the lines at what could do there. Some joking and jesting by Mr. Trump, as always, to say that I'd like to see lower interest rates, and of course interest rates are going to be the topic of a conversation next week, given the Fed decision. To what degree do you think that some of the moves that we did see in the US, the S&P, the NASDAQ, are being influenced by the fact that it seems that Powell is safe, at least for now?
So yes, for sure. But to be honest, I think it's more degree of the market not taking Trump seriously at his words now. Okay. I do think so. In the short term, I think Trump yesterday showed that he's trying to actually ease off of power a bit, but by trying to, I think, lower the tension slightly. We've seen what Trump did to South Africa. He can up the ante quite quickly if he wants to. I think he's been advised it would be a bad thing for his presidency to make a big statement towards the Federal Reserve. So I think he acknowledges that he's going to have to deal with Jerome Powell into next year. Sure. But I think beyond the short term is where maybe the concerns come in, because then there'll be a new Fed chair next year. And will that chair be influenced by Trump? Maybe. And that is where the concerns about the independence of the Fed come in. But I think this week, maybe there's been some positive news flow around that, but I do think the likelihood of easing, Federal Reserve easing to come, is why we've seen, or one of the reasons we have seen the US being quite strong in the past week or so as well.
Yeah, we're left with around 3 minutes, and I do want to touch on the earnings that we have seen, and perhaps let's just go there right now, because they are said to reflect, in part, some of the angst that a lot of these company CEOs have had and have had to contend with regarding tariffs. Perhaps not fully, but in part. Just your assessment of the state of corporate America right now against the current backdrop.
So I think largely a mixed, or not largely, but a mixed bag, but largely positive. So some companies not faring well, but I think we've been surprised by how resilient both the US consumer and the US corporates have been. We haven't seen much evidence, widespread evidence, of margins falling because of tariffs being pushed through yet, either to the consumer or to the company. So earnings season has been good, and I think there's more tailwinds than headwinds. Tariffs not really playing out as we would have thought so far. And I also think there's potentially more disinflationary forces in the US economy still than inflationary forces right now. That can change quickly. But we saw with the banks, I mean, it was strong. The trading division's really pumping. And then with most companies that are exposed to artificial intelligence and technology that we've seen drive the market, we've seen capex spending now, companies promising to increase capex spending. So those tech companies really still firing on all cylinders. And then we've seen other companies around the world, TSMC as well, really exposed to this artificial intelligence theme. And I think that is going to continue driving this market. I mean, I've been hearing chats of bubble talk now, because we really just, the market keeps running into easing, deregulation in the financial sector. We've seen government spending in Europe and in America. The conditions look perfect for it to keep going, but that can change with news flow. There are risks, but I would not be betting against the market for the next few months at this point.
Which is what I wanted to ask you, just as an investment house, based on some of the numbers that you have been tracking, these companies that you've been following, the thematics, particularly around artificial intelligence, have they, based on their report card, maybe caused your house to perhaps invest more in them right now, even at these valuations? Or have you perhaps taken a more cautious approach, just given the bubble talk that you are hearing in some corners?
So we were optimistic 3 months ago when the market sold off. That's when we thought that the market had completely forgotten about the artificial intelligence theme, which we thought was wrong. For every 10 headlines about whatever, Iran and Trump and tariffs and this, there was one. Yes, exactly. There was one about the US AI story. And we think now the market has flipped again, forgotten about the risks, and that's when you should be more worried. When the market was very worried is when we were actually less worried. There's not as much negative news flow anymore. So this is maybe the time to start getting a bit concerned. And we're not just piling into AI blindly. The valuations have gotten rich, but we are looking for opportunities in the AI space, of which we still think there are some. And if you go down the cap spectrum, especially, that's where we are seeing opportunities. But Alphabet is one that we liked a few months ago, and it's run really hard. So that is the sort of story that we do like. So still positive, but not blindly entering the AI space compared to maybe 2 or 3 months ago.
Yeah. Tesla, that's also been a major talking point, not doing so well. And Elon also on the investor call just talking about some of the risks out there that could impact the growth of the company. I mean, the competition, heavy competition from Chinese counterparts, to some of the policy incentives that did bode in Tesla's favor previously, which could potentially be pulled. I'm talking about those credits for electric vehicles. What are you doing with a company like Tesla right now?
So Tesla is not one that would be putting in sort of funds that most clients will go in, but for the select client who understands, I think that's the key point, the Elon Musk factor, we're happy to invest, but we would not recommend that for the layman on the street, because Tesla is one of the most volatile stocks on the market. And it's the Elon Musk factor. He's probably their biggest asset, but he can also be the biggest headwind and liability for it, which is what we're seeing at the moment. The less political talk we see from Elon Musk, the better, because we do think that Tesla is one of the biggest AI stories at the moment. And that is why, for select clients, like I've said, we are entering Tesla because we think all the negative news flow has made quite an attractive entry point. And they obviously are struggling at the moment. We think they're going to have a rough few quarters ahead still. But beyond the short term, like I said, we think that is a true AI story. And right now we're dealing in a pre-autonomous world. There's a lot of execution risk, but I do think there's a good chance we'll be looking at a post-autonomous world in a few years' time. Well, in the Western world, in South Africa might take a bit longer.
Yeah. And so you're saying, I mean, we should look at Tesla as an AI company, not necessarily a company that's pioneering all this kind of self-driving and autonomous driving, in which it's got bigger competitors, or competitors who seem to be keeping Elon awake at night, the likes of Waymo or even BYD. You're saying in the long term, perhaps Tesla comes out winning here?
Based on the current evidence that we have seen now, Tesla's technology is superior to those companies. Okay. There's obviously the price point issue, which is where the Chinese competitors come in. When this technology comes to South Africa, I think we all know where we are going to be getting our EVs from in the future, and it'll be from the Chinese side. And I think it's going to turn very political, which is why it fits the Elon Musk narrative, like how political it is right now. But I do think that Tesla, NVIDIA, those are some of the big AI stories. And I think Elon Musk is the big risk there. So we'll see. Maybe there's a life after Elon Musk as well.
The opportunity and the risk. That is Mr. Max. Thank you so much for joining us. Absolutely fantastic to obviously get a in-depth reflection on markets over in the US right now and some of the companies that are doing the moving and shaking on their indices. Keiran Witthuhn, portfolio manager over at Robert Cowen Investments. Going to a short break. When we return, our last conversation, obviously unpacking the deal or no deal, perhaps, in the property sector involving Hyprob and Mass Real Estate. Do stay with us.